folks, I'm going to tell you 5 quick facts about black bull markets. Now, did you know, number 1, they're New Zealand FMA regulated. Number 2, did you know they have a copy trading service where you can either be a signal provider or copy signals? And number 3, did you know they've got over 26,000 tradable assets, including Forex, crypto, stocks, indices, and even more? And number 4, did you know they offer 500 to 1 leverage? And number 5, if you open up an account today and trade 1 lot a month, they're going to give you TradingView Pro for free. Check them out, Black Bull Markets.
Good morning, good afternoon, or good evening, depending where you are in the world. Hello, hello, hello. My name is Gentsla, and welcome back to the stream. We do this every Tuesday to Friday, and we are doing our 100K Blue Guardian challenge. And we've, of course, made some progress on that, which is great. So let me share that screen right now. Just quickly, up to date on where we are. Taking some trades, and now we're on 0.828% or 0.83%, depending on how you want to call it. We have our number of trades, our win rate, profit factor, average RR, all that good stuff. But overall, we're sitting in profit, which is great. Okay, so yeah, we just continue on trading. Patience, time, it's an infinite challenge, so we can do as much as you want to or as little as you want to. We just continue on going. Okay, so good morning. For me, it's still morning, so it's 10:32 a.m. A couple more minutes before I start looking for trades. Is there a giveaway for today, Don FX? I personally don't do giveaways on my channel, but Trading Nuts does have a couple of things that he does, and so just keep up to date on his Twitter and also through all the promotions and stuff that he's been doing. Good morning, Pranav Kahir. Good morning, Emmanuel. Welcome back from Fort Lauderdale, Florida. Hello, Alicia and Tony. Welcome back. When I'm trading on my personal account, what risk do I trade? I take a 1% risk on my personal because I know where price is going. Tom Wade, welcome back. I'm glad to see everyone is here. All right, we're all doing very well. It's great to see that you're all here. I've got some very interesting concepts. So for those of you who are watching from America, okay, there is. It's actually quite big in a sense what I'm going to present today. But again, I don't have time in what I call now my pre-market session when I'm marking up the charts to present the concept. But it's actually quite nice. So maybe later on, if we get a trade or not, I can show you that idea, and we'll run through it almost like a question and answer thing, so that it seems like you are actually the one creating the concept yourself. Okay, this is a good way to not just take trades based on what other people say, but to do your own analysis and to eventually get to the understanding of where the market is and how the market is. Okay, so this is going to be based basically on what I did yesterday. So yesterday we took a trade, right, on the stream. Let me just close this and present my TradingView chart. Okay, so yesterday we took a trade on the stream. Let's go to the 1 minute, and I'll show you exactly what was going on. So we took a trade over here, yes, and it was kind of a loss, right? But I know that price is going to come up to here. I do know that it's going to go there. Why? Because of this same analysis that I do every time. Previously, if you have been in my streams, you'll notice that I put a 12:30 candle on, so the open at 12:30 over here, and I call this 12:30 p.m. Of course, slightly different color. Now, as I'm doing my analysis throughout the day, that is a key point. Why? Because it's within the New York lunchtime, 12 to 1 in America. It'll be the middle of their lunch. It's almost like a key point. London loves to come for that. They sometimes might not come all the way up to seek what I was actually expecting was this fair value gap here. I was expecting that to get taken yesterday, but it wasn't. There were equal highs and stuff, perfect for it to range higher. So this is like a liquidity setup for at a later stage. So even though I was wrong, okay, what I did was to prove a point, okay, because as you see on my chart, not my chart, on my Blue Guardian challenge, I did not take a loss. So what I did was, because I am 100% confident in the way that I trade, and as I said, I know there's some people out there that literally don't have stop losses and they just trade to liquidity. That is liquidity. Later on, where does price come to? Right here. Fills the Hong Kong gap, comes to liquidity, and then goes away. So I know that price is going to come up here. So what I did, because I have my risk managed and I'm like almost 1% up, I was like, okay, I'm going to take a test and we're going to run through this. So what I did was I pulled my stop out and I waited for this time here. At this time, as usual, my expectation is for price to flip a switch and then seek the opening gap, or the Hong Kong gap, as I call it, which was filled to perfection over here. Now, that is, again, 250 to 310, the trade idea it presented. And so I just wrote it out because I was already in the trade from the AM. Now, I knew that price would come here. This void, check how price did its thing, and was respecting it, went down, it started. Whenever you see things like this, wherever it looks like it's mechanical in a way, that is price telling you that there is liquidity above it. So then what I did was I waited, and as soon as price came up here and came into the daily gap, came up here, I took the trade off, that trade. Funny that. And this is me just showing you how I am confident in my analysis and how I view the market and see the trades. So we continue on with the times. Obviously, 6 o'clock presented to us to 6:30 presented us a reversal, which it did, and then we have from here it has not sought New York has not sought buy side yet. So then price came to the MMG, as we know what the MMG is. It came to the weekly, which is right over here. You can see this, the white over here is the weekly opening gap. And so it's just come to the MMG and bounce, and we're going to the weekly. Now going into this right now, looking at price, again, today, I'm long. So how do we get our long bias? We set everything up. How much time do we have? Still 10 minutes, got enough time. So first thing we do is we go look at DXY and we go and check and see. Let me just see if there's been responses. Let me pull it off to the side. Why markets went up after market today? Hold on. I'm just reading the things. What is the thing you said? Broke your rules on a trade yesterday. So that's exactly what I said. I broke my rules by not. I extended my stop loss. I don't do that ever. All right. Now I broke my rules because I had a point to prove in that I know where liquidity is going, where liquidity needs to go to, and it will get to that point exactly every single day. All right. And my point was that it's all again, it's a mental game. If you in yourself, if you take the hits and you take them personal, you then get scared in the market being afraid, we need to try and stomp our fears away. All right. Now, next question. Oh man, you're wild. How much drawdown did you experience? It wasn't that much. It was only, I think it went up to like all the gains that I'd made in the week. So it went up to, I think it was 800, and then came back. So I knew it was going to come back. That's why. MMG is a mid-morning gap. Matt Salazar, welcome. Okay. Exactly. MMG, mid-morning gap, taken from Hong Kong markets. All right, so now we're setting up, look at our time, 6:04 to 7:45. Isn't that consistent every day? That's our opening. Opening over here. There we go. This is our opening gap. Our price is actually looking really, really nice to come down, which means I'm expecting buyers on the other charts. Of course, we are within a Hong Kong gap already, which is nice. But we have our times, as usual. 2:59, start of the Hong Kong gap. 2:59 closing candle. Right there. Okay, that's the start of our Hong Kong gap. Now that's on the sell side. Price will need to come down and rebalance this sometime today. Okay, and it will either do it in the Asia session, or if it continues going up, it'll do it in London session. If it doesn't do it in London, it'll do it in New York. That's literally, you keep rolling back the sessions. All right. Now we do the same thing over here. So we have 6:04, 04, closing of the candle to 7:45, opening of the candle over here. That is our opening gap for the day. We then have our 2:59 closing candle up here, right within the mid-morning gap. So let's look at the 50% of that mid-morning gap. Oh, it's so close. So like I said yesterday, when you're looking at these things, that little 50% point, the consequent encroachment, the times are important, as you can see here. So this is the open, and price has not traded anywhere near this open yet. Where are we right now? We're actually creating, let me just close this. The trade might actually present just before, looking at the other markets as well. Still got 7 minutes. The equal lows down there. Not yet. So here's equal lows down here. At 12:30 p.m. again. It's why that's on the chart is because that's 12:30 from Monday. Monday has not been seen to. As soon as it does, it comes in, it gets seen to. Round number, weekly gap. There's a whole bunch of confluence for if you were in New York to be taking longs. After this massive move down, that's like the confluence. Let's go to GBP quickly and set the same thing up while I just watch price sneakily on the side. So yesterday we were here. Okay, we started coming down. Again, I took this on my personal, and guess what? I took a loss on that. That's unfortunate. But I did later on at 3 o'clock over here. I did take, there's a little fair value gap, I'll show you. So this fair value gap over here, I entered right over here. We have this and perfectly in here underneath this candle, and it went to 4R. Aroundish. It was there, right there on that like little tip over there. That was a trade. Again, time, fair value gap, direction is obviously towards the Hong Kong gap, and then we have the rest of price. So we're looking at where we are right now at 2:59. Closing candle. We have 6:04. Closing candle. 2:45. Opening. That's the opening gap. I'm just looking at this because AU has just made a push up. Let's see now. AU's made a big little push up. A big little, yes. Big little over there. And AU's just been on a tear down for some reason. Even though the CPI, what's interesting about the CPI is that the CPI number that came in was actually lower than so it wasn't negative. It was actually better than previously. So for some reason the market's doing a reverse on CPI on AUD, which is funny. We're looking. So you can see the same things on price. If we have a big range day, then 6 o'clock you'll have a reversal indicated in here. You see, ding, 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 6 o'clock, gold, bang, reversal, funny. We have 950 to 1010. So here's 950. 950 to 1010. We created a big fair value gap and it sought higher prices. 3 o'clock presented the same little opportunity to get in to take some profits. And we'll get to why I say that New York traders are super, super lucky. Why does price like reversing from 6? So for a big range day, because it misses the 250 to 10 past 3, because it normally breaks and goes straight down. Okay. Then what you're looking for is you're looking for that 6 o'clock. Because it's again, if you're working off of 4-hour candles, you have 4, 8, 12, 16, 8, 4, 20, which is 8, and then midnight. Just we're now waiting for an indication that, because I'm long, as you can see now, it's perfect. Today is one of the most beautiful days. Why? Because the price where we have price up until the open, there's 11 pips of movement that can be had. GBP, same thing. There's a range that can be had. 13 pips. AUD, we have opening is over here. So we have our range from where we are down here to here is about 6 pips. So I'm just waiting. We've set a whole bunch of equal highs. Over here, they got sniped to go lower. I'm just waiting for price to show me a market structure shift, and I'll possibly be getting in long. Yeah, so retail sales in Australia is down because we're about to we've actually technically been in a recession for the last 6 months, but no one's actually aware of that. It's the recession actually started in September last year, and then over December, that's when it all kicked in. Now, of course, they needed something to blame for the mismanagement of the money. Where are you based? I'm in Melbourne. In Australia. The shop owners are aware. Yep, the shop owners. All the news and stuff. People are losing their jobs. There's lots of stuff happening. Now, this is going to be a worldwide phenomenon. Shane Faik, yes. Long Euro USD. I'm long until the opening gap. So again, all I'm doing right now is I'm waiting for a market structure shift. What is a market structure shift to me? Okay. It's very, very simple. I explained it yesterday as well, but I'll just pull back price a little bit. As price comes down, what we have is we have this section over here. These red candles over here, that's not a market structure shift. That is a market structure shift because it breaks those candles. As soon as that happens, we have a fair value gap in price right there to there. And then guess what happens? Price goes up. Looking for the downside, this could have been a market structure shift. That's the reason why I don't trade during this time, because the market's actually is positioning itself. Okay, it goes up, 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 up. It does break this over here. It does take a fair value gap to come and seek the liquidity underneath here and then start going higher. Here is another market structure shift. We have this break right over there, right there. That fair value gap over there is now a high liquidity point target for me. When I look at this, I just see squares. That's a beautiful square right there, don't you think? Or rectangle. Call it whatever you want. Square, rectangle. What do we have now? Let me just make that orange. 1230 has just been hit from the previous. We are within the weekly open. And let's see if we get our market structure shift with the fair value gap. As soon as this gets broken over here, that is my indication, especially because we're in the time right now where it needs to start. Let me actually just get this ready. We have to wait for, if that's broken, the next candle, the third candle. Yep, it's broken. So wherever this closes, it'll create some kind of fair value gap in price. Okay, whether it's here or here, we're waiting for that. And that is my indication. We've got another 43 seconds before we see what the market wants to do. Not wants to do. We know it's going there. We know it's going up. What's GBP doing? We're also waiting on the same candle. In 10 seconds, we'll see. Here's a nice fair value gap, so I'm just going to label that as FVG. Again, if it doesn't come into the FVG and keeps on rolling, that's all right. So as you can see, it's broken. It's going for these equal highs that we mentioned. So it depends on the range. Again, the 6 p.m. reversals generally it goes for a liquidity point. Good luck. Thank you. This is market manipulation. With news events, market makers make price move where they want, when they want, anytime they want. Big money always wins. It's the way the market works. Manipulate. Exactly. Okay, so now what it looks like is that we are possibly going to get triggered into our trade. It needs to go down lower. That was it. Now I expect price to go up. So sorry, let me show you my entry. My entry was at the high of this fair value gap. My stops are underneath here. And we're going to the buy side. Okay, this buy side is all the way up to here. And we have a 4.65 R. And now we wait for price to do its thing. And off we go. Again, I have partials. So what I do is I have my 4. Actually, it's not 4.65, but I've got mine at 4. Okay, right here. At 4R. I'm expecting 50% of that. And that's when I take off from that entry point. That's when I take off my 2R. Does this guy have socials? Choc FX. I have Twitter, so I'm at the only Gentsla. I made it twisted just to follow you. Cheers, man. Thank you. It's nice. Nice. Because of what price is doing right now, it might come back. So what I'm going to do is I'm going to take my 50% off now, and I'm going to pull my stops to break even, and just let the rest ride to target. And if it stops me out, whatever, it's fine. I've made money. So it is what it is. But you see how it's literally, we had 1, 2, 3 minutes. That was that was literally a trade. I'm expecting it to go. I'm actually expecting price to come up to here. So yeah, while that happens, and like we said, we've already made money. How much did we make today? We made another like 90-ish bucks. So we're sitting on 0.9% now. And if it goes to full target, what do I be expecting from that? Another 420. And if it's going to go up to where I want it to go to, which is over here at 9224, let's just go look up here. 9224 224. Yeah, let me actually just put it up there, seeing as we're riding anyway. 9224 224. I'm put it up to just above the highs, actually. There we go. Just on that high, perfect. So that's done. I'm putting it to just above, not on this high over here, but right there. Now, if you see this on the 5 minutes, what you'll see is that we have now, for the 5-minute traders, you have the creation almost of a gap over here. Now this could be their fair value gap if they're trading. As you see, why I trade the 1 minute is because you're in and out in like a flash. It's very, very quick. And guess what? It leaves the rest of the traders room to get in. My entry is below. It's down here. So if price can move all the way up there, that will be a beautiful 6.57R. So we're just going to leave that to ride. DXY, of course, is coming to fill this in. We have a beautiful little fair value gap in here. We have structure that was broken. Market structure shift again for me is that candle right there. GBP did the same thing. We came up over here. As soon as that one was broken over there, we've created a fair value gap in price. And so it came in and filled this one over here, which is perfect liquidity over there, and it's going higher. AUD, same thing. As soon as that was broken right there, I'll zoom it in so you can see. As soon as that one got broken, bang, we then have our movement now. This is the FVG on the 5 minutes. Not yet. We have to wait for this candle to close. So waiting for this candle. As soon as that candle, again, you have 3 candles. 1, 2, 3. Whatever the difference is between that third candle and the first candle, if there's a gap in price, that's an FVG, just as we explained on the 1 minute. So right there was a fair value gap that was created. It started in, bang. Money's made. Even if now we lose the trade and it goes down, I didn't lose. I've locked in profits. Partials are king. Partials are king. Okay, so I'm just gonna let this ride, okay, and see what happens. We're waiting for that 5 minutes. I just want to see if the 5 minute closes with a fair value gap. In 2 minutes, that will happen. But yeah, anyways, how was everyone's night? What do we get up to? Short UJ been waiting all day. Again, my same thing with the Japanese pairs. I don't trade the Japanese pairs. If you're shorting it, then you're doing exactly what I'm thinking, which is that DXY is going down to fill the daily gap, which means that all other pairs need to go up. So UJ, because USD is the first in that pair, the US dollar side of it is going to drop. So yes, that could potentially be a short. I don't know. I don't necessarily trade it. But what I'm looking at over here is the $521 profit if it goes to my target, which it most likely will. If it doesn't do it now, it'll do it in London. How do you lock in profits? Is it you're breaking even? So I'll show you my broker chart quickly. Let me just remove this. Where we present. There we go, my broker chart. As you can see, I had my entry. My stops are now pulled just above that by a few pips. So what will happen is if it does come and come below here to this little fair value gap in price, what will happen is that I will be stopped, and guess what? That's okay. I've made money. And then if it continues to go up, great stuff. Great stuff. If not, still great stuff. Came up here. I took my profits. So as you can see, my account history. Let's just scroll all the way down. My trade history. I took that as profit. Just underneath the 2R, which is fine. 2R is a little bit of risk. If I held it, the 2R would have just taken out now. We do have that 5 minutes, so this is going to the 5 minute over here. We do have that fair value gap on the 5 minute now from this candle to this candle right over here. So price can come back here. If it does, okay, if not, whatever, and then it should continue going up. Again, I'm not phased because I've already made bank for the day, so it is how it is. Again, a perfect day today. Perfect. Everything was perfect. We had the distance away from the opening gap. Shocker. What a shock. Which session do you... So hold on, I'm just reading. How do you lock... So yes, I was answering this question. How do you lock in profits? So I have on the chart over here, okay, as you can see on the little left side over here, it says TS. What that is a trade manager. So what I have is I can set my risk, which I do for my trade. And then what happens is that is the risk that I'm taking on. I can close 50%. I can close 100%. I can do whatever I want. I have it baked into my trade manager, so I can change it. So right now it says close at 100. That's because I've changed this over here, not here, here, this one, to 100. Okay, because I manually closed it. I then changed my partial close because I normally have my partial at 50%, but now I've changed my partial to 100. So because I'm expecting it to continue going up, I want to take full profits on this trade. And then now it should continue up. If it doesn't, it's okay. Like I said, we've already made money. I'm fine. You can change all of this partial closing and stuff as well. You can set your TPs. SL1, 2, 3, and 4 is partial closing, so I can close as well. So what it does is it enters with like 4 different trades. And yeah, so we're just writing a bit, make sure that that's on 100. Yeah, it is. As you can see in my setting over here, I had it on 50, so I could close. I closed manually at 50, and then now I'm just waiting for full profits. You can enter trades as well. It's really nice. So like I said, you can bake it in. So let me just make this small and put this over here, and you can drag your stop loss out and in. So it's just like TradingView. You can have your RR. I have my RR, my baked in at 4R. So whatever risk I'm having, it sets my target immediately at 4R. And then because of the 50%, that's baked in as well. And immediately that gets set. So let me just remove that because I'm in a trade already. Okay. So let's get on to some other questions while this is happening. Still daytime in New Zealand, watching from work. Yes, it is daytime. I'm in Melbourne. I'm in Australia, so we're at it's 11:08 a.m. So I think it's 2 hours behind you there in New Zealand. Did you already do a trade breakdown? I didn't do a trade breakdown from yesterday because I was showing the thing that I did yesterday to prove my point about where I expect liquidity to go to throughout the day. Which session do you trade a lot? I trade, well, obviously I trade Asia. I actually trade Asia the most because it's the only time that I can get to trade because I have a family. I can trade the London session, but the thing is I have to trade from my phone as I'm usually busy in that time, such as I have a child and I have to get her from daycare and stuff. So I'm not like active at my desk. Can you please explain your entry? Yeah, I can explain my entry. And are you getting in again? No, once I have my entry, I generally, because I'm already in, I'm waiting for profits to be taken. I'm not gonna enter again. I'll just wait for, because I've already taken partials off. As I said, it's with this challenge that I'm doing, it's an infinite challenge. So I have as much time as I want. I don't need to waste time or spend time doing other stuff because we know exactly what we want. How much data did you collect when backtesting the strategy? So this strategy yes, I backtested it, but I actually forward tested it the most. So as I said, I was in the charts, I was checking the 1 minute candles, I was checking times and stuff like that, and I created the strategy based on what I saw, and I forward tested it. SMT with your entry as well. Very nice, very nice. Yes, yes, yes. As you can see, with price, what we had was we had a lower low, and then we had a higher low. Which one do we take? The one that's lower. Yeah, so almost halfway. To maybe I should pull this a bit lower, because I don't like it residing above just there. Then why I do that is because if you have your full target as perfection, the problem is that you have, how do I put it? Price will go up here and not give you the fill to exit. And you're like, oh damn. Yeah, that happens. Is that from your broker? No, it's from the MQL5 market. So up here in the right hand corner, you have your MQL5, and there are different trade managers and stuff. This one costs $100, and it's for a lifetime license. You get 10 activations of that license. You can also trial it. So what I did initially trialing it is you can trial it for 3 months for $30. But I mean, $30, like now, I've just made that in a partial closing of one trade. So ultimately, you know, it's worth the investment. And if what I mean by 10 activations is if you're on one machine. So I'm on one machine. I've got 5 different brokers that I use. I can have it across every single broker on my one PC. And what happens with that is that only counts as one activation, because the activation per PC that you use. So if you're in another location using a different PC or whatever it is, that will be another activation. That's how that works. Any idea on GBP USD? Let's go have a look. Any idea? Yeah, I'm waiting for the price to come up. As I said, I'm looking for longs. At my time, I take my trade, activate, go. Done. And that's it. Literally. Do I know what my average strike rate is? Yes, I do. So let me remove this. So again, it depends on your analysis in the market. If you get really good at reading price, then you can do a lot. I need to present. No, I closed it. Here, let me open a new one. There we go. So do I have any idea what my strike rate is? Answer to your question, you look at my win rate. You know what I'm saying? Yeah. Okay, so let me just remove that, and we go back to trading view. Window, trading view. Now, taking off a partial is considered a win, which is great. So again, we have that 5-minute fair value gap right now. Price wants to come down, it'll go to here. If it wants to go lower to here, then the probabilities are probably that price will continue going lower, seeking this liquidity down here. But what is the time right now? 15. We're exactly on the dot of where we're about to see the Hong Kong gap be set. Now it still needs to be filled. So whenever this candle closes, waiting for it, waiting for it, waiting for it. How much time? 33 seconds. I'll be waiting for a while. Let me keep on with the chats over here. Are you using PD array for determined direction? No, I'm using the Hong Kong gap. And then so within my analysis, I then use ICT's concepts of, okay, this is a PD array that has come from this side over here. We have price and structure being set. We have the opening gap over here. Again, my whole target is the opening gap. I'm expecting price to come up here, higher actually, because that is the beginning of the Hong Kong gap right there. So I know I have all the other lines on my chart. I will delete them. Okay, I just use them because they are previous Hong Kong gaps. So if we go into the 1 hour over here, you can see that all of this other is Hong Kong gaps from previous price. This is the MMG that's resting. Hong Kong, the Hong Kong gap high is within the MMG. So that's lovely. That's actually beautiful. So here we go. Now that's been set. Now I have so the closing of 15, the opening of 16. That now we have our Hong Kong gap set. So it's quite a nice big Hong Kong gap over here. So from this candle over here all the way down to here, price will in the day fill this out. What are we looking at right now? Again, places of interest are this point over here. If I see reactions of, okay, I'm going to start seeking sell side, then no. Then I'm out. And I'll take all my profits. What's our deal entry price on GBP USD? It's already moved. So my trade for GBP as it would have already played out. The entry was long ago. Yeah, no worries at all. NASDAQ to pop. So NAS and US 500 won't move a lot in this session in Asia. And if they do, it's a random event. Gold popped up 20 pips at 11.16. Let's go see gold. Yeah, but where did it start moving from? Look at your times. Again, my trade times are between 8:50 and 9:10. Right there, at that point, it decided, oh, it wants to go up. So it's not just popping up. It's calculated. Where's it coming from? We go over here. We go look at your 259 candle. The closing of 259. Right there. Where's price? What a shocker. Is it a shocker? I don't know. Doesn't shock me. Slurp on my coffee. Yes, Wade, exactly. Like I said, some days you'll take a loss, but you keep on applying the same plan, the same analysis, the same everything. And on a day like today, with how I view the chart, with enough distance, enough everything, you then can actually make the correct trade. Now normally in Asia, I would, like today, I wouldn't have traded any of the days of the week. I would have only traded today because of the way the price is. I would have watched price, but yeah. Let's see the world. Yes, the Hong Kong gap is a concept that I have created. based upon Asia liquidity. So the closing of 259 and the opening of 916, or the closing of 915 and the opening of 916. Like I said, I don't trade NAS. When I'm trading New York, I only trade the US 500 or S&P, depending on what you want to call it. Internationally, we have to do the we have to trade the US 500, unfortunately, because the ETFs or the CFDs on it are as they are. Alec, we have the yes, Iridium Group, exactly. What makes me favor is because of the SMT divergence. So you'll see here at the same time, okay, here we have 850 on the dot, okay. Price over here from 840 to 850, it went down. On GBP, 840 to 850, it went up. So what that showed me was that price was being held and was willing to trade higher. So I look at the one that has the lower, the one that start lower. That's how I take my entries. So if GBP presented the same thing, if GBP was over here and Euro, for instance, was over here, I wouldn't have traded Euro, I would have traded GBP, because then it would have broken, comes back into the fair value gap and goes higher. There was another question on the chart, so let's just go there. I'm watching both EU and GU. Do you have any content that explains? Every single day I come on the chart and I tell you the times of the Hong Kong gap. The Hong Kong gap basically is I'll show you it later. So if you stay tuned until the end, when we win this trade, or if we get stopped out, again, doesn't matter. We've made money on the day. Like I said, it doesn't faze me. Whatever happens. Again, my analysis is showing that it's going to go higher. And so, yeah, I'll present the whole thing later on, and I'll show you on US 500. There'll be a video about the Hong Kong gap coming up very, very soon on Trading Us channel. I will also actually make a personal video that I can present to everyone about my ideas and my concepts and how they roll. It's basically very, very similar to ICT's opening gap. That's why I have the opening gap on my chart. That's this over here. Right there. That over there is my opening gap. This is the Hong Kong gap. Let's see what DXY. DXY is already within the opening gap. And you see how it's bouncing perfectly on the previous Hong Kong gap? It's amazing. Let's just set this quickly. 915. $16 open. So I'm expecting it to fill this in, at least. But now that we're at the daily, it might turn around. I don't think so, though. Targets underneath, we have weekly open. It's already come back over here. It's filled this leg of 50% in perfect. So from high to low of that leg over there, 50% was seen to, and now we're raging away. We have a whole bunch of equal lows underneath here, which again, these equal lows is the previous Hong Kong gap, opening gap down here. You can see that. That was not seen to in either London or New York. So again, expectation is that if it's not seen to, it's carried on doing its thing, I will expect it to come down. That's why I'm looking for buys on other charts. Now, how it presents the opportunity to you throughout the day, that depends on a lot of stuff. Okay. The HKG. That's why this is here. HKG. It's a concept that I came up with myself because I figured out that price goes to that a lot. And as I said, I'll tell you more. We're just waiting on this trade. And then my account will be up how much after if the trade continues panning out, the accounts will be up another 0.5%, which means we'll be sitting on like 1,200, 300-ish. Jerome, yeah, the one that goes lower for me is the one that wants to run. What I've seen, specifically when it comes to Forex nowadays, it's changed slightly. So yes, GBP is running, but it didn't offer you an entry. So here we go. So do you see how right there, as what we did over here, structure was broken, we had a fair value gap, it offered me that entry and I took it. On GBP, at that same time, okay, structure was broken right here. So that would be the fair value gap that I'm looking at. It went up. Would you have taken this one over here? Maybe. To get that entry over there? Maybe. But for me, it's this one. It did not give me the entry that I wanted on GBP. So I would have had my limit order in place, and then I would have had to just like wait and then see it not deliver what I wanted. Which happens some days, you know? Sometimes it happens. Where are we now? We're bouncing on the opening gap. So all of that, again, this square liquidity, you see how price came to it perfect? Came down, went up. We're in the next square liquidity over here. Now that's going over. Fortunately, that is a previous, again, funny how that those things get set. But that is a previous Hong Kong gap in price where that's beautifully set. So yeah, hopefully you've been enjoying this educational entertainment. This low has been set. We're making equal lows right here on DXY. So let's just pull that out in price. Now we have equal lows that are set. If we're going to have a retracement on DXY, it's going to come from this point. Again, we filled the daily open. I'm just looking at the other charts. We've taken highs on GBP. I'm actually going to just full exit my position. Yeah, so this trade went to here, just above here. Not too bad for the day. 4.39R. What a shocker. Not too bad. Okay, now the trade's done. Let's present my idea to you, seeing as I've only got 30 minutes left. You see what I mean? It went straight up to fill this in perfectly. What a shocker. Let's change this now to US 500. US 500. Which platform should I use? Doesn't matter actually. Black Bull. Well, seeing as we're seeing as what's this trading that does the stuff through Black Bull, let's use that. Okay, now my concepts are specifically for the New York trading. Now I know that this is probably going to come up here. Just remember, in price, that is my expectation. Okay, is that this gap needs to be filled. This gap needs to be filled. Eventually, in time, it will. So let's go look at US 500. Now, for those of you US traders out there, okay, if you're ever getting confused, it's very, very simple. You know what I'm just going to do? I'm just going to do this, so I see no price, and I'm going to pull it back to where it locks me out. There we go. And I'm going to go back into price over here and make sure that we have our times. Now, I can't see a price before this, so I'm just going to wait for the next day. I can't see 4 o'clock. 4 o'clock is the open. Okay. Now, let's get into it on the next day. So we have here. We have right over here. Okay. 6, 12. That was public holiday. So we don't trade that because it's a public holiday. Let's go to the next day. Okay, let's look at this and do it out. So again, you're going to use the same thing. 59 closing candle right there. Hong Kong gap is on all charts. Look how price respects that perfectly to the pip. Let's actually make it actually perfect. Okay, perfect, lovely. Perfect, lovely. Now we have 4 o'clock, which is the closing of the US session. So let's make that into 4 pips. That's the closing of the US session right there. Now we are looking at 9:15, which should be over here. 9:15. Opening, so you don't, the closing of this and the opening of that. I use the opening of the 9:16 candle if it's not perfect. Okay, you can see how perfect price is throughout the day there. That is your liquidity. Every day, liquidity is the same. We have our gap over here, which the market opens at 9:30. Okay, opens down here. So this is our gap. Opens at 9:30 over here. 9:30 open. So you draw that out in price. Now what we have over here is this gap, closing, and the opening price will be seen to. Liquidity on the buy side, you'll see later on. It's funny. So what do we wait for? 9:50 and 10:10. It shows me indication wants to go higher. Then from there we had it didn't actually work out here, but we had 11 o'clock. You could have taken that trade on this fair value gap right there. Put your stops at the low or lower depending what you want, but you know that price is going to go towards the gap, as you can see. Now I leave that on my chart because that's the Hong Kong gap. Now let's go further. We set a new day. 2:15, 2:59 over here. 59 closing candle, bang, right there. Now we have to do it to the pip. With indices, you have to be exact, like perfect exact. It has to be, or always it has to be perfect, but we're exact over here. And we have 4 o'clock closing. Again, let's just take this, add it in to this point over here. 4 o'clock, bang, closing of 4 o'clock. Okay, right there. 4 o'clock closing. Done. We then drag that out through time and price. We then have the opening of 9:30. Which is over here. 30, open. Okay, this is now your gap. We've set our Hong Kong over there, and that is 9:15, which is over here. 16, there we go. This is our Hong Kong gap. Right? Now, as soon as 9:30 gets reached, we're looking for 10:10, not 9:50 and 10:10 for a price to break away, have a fair value gap, because it needs to fill in the gap, as you can see over here. The only fair value gap that was presented was this one right here, with the lows underneath there. What's target? Now, price goes all the way through, all the way through, all the way through. Where does it react to exactly? Exactly. The highs of our Hong Kong gap. Like almost within, like it's like, how much distance is that range there? From here to here? 26. Within not even 1 point. Yeah. Okay. Then we're setting our next day. So that would have been how much of a trade? A 3R. If you were able to refine this entry down even further, you could have put your stops underneath here, taken it after it broke down here, it went up again, broke this market structure. You have your fair value gap right there, bang. And then underneath the lows, and again, you're targeting the same price, which gives you a 6R. Depends on your risk tolerance, of course. And it's consistent every single day. Now, this Hong Kong gap has been seen to. The one on the buy side has not been seen to yet. So that's a future point. You leave that on your chart. Okay, then we go. So I'm just going to delete that, seeing it's been seen to. I'll just leave it in. We're setting the next day. So 2:59, it's the same thing every single day. Closing of that candle, bang, 2:59. The opening of 9:16, which will be the over here opening. Okay, that is now our Hong Kong gap set in stone. We have the closing of 4 o'clock. Where's 4 o'clock? It's up here somewhere. There we go. 4 o'clock, closing candle is right there. Drag that out in price. Up until we reach 9:30. Okay, let's go down to where 9:30 is. $9.30 over here, opening price. So that's the beginning of that blue candle. We have a very large range over here that needs to be filled. And of course, we have our Hong Kong range that also needs to be filled. In price, within 9.50 over here and 10.10, there'll be an indication that price wants to move higher. Okay, so it does. It leaves us space and room to get into a trade that's going to go obviously towards try and fill the rest of this gap in, this huge gap that's over here. It needs to fill it in. If it doesn't do it on that day, you would have still made money because you would have taken partials and all that good stuff. You then set the next day and the next day and the next day. If we look at where price eventually turned around, where did we go to exactly? Let me pull it out of the 5-minute chart. That Hong Kong gap, perfect. This range over here, from this one over here, where was that? That was our 2.9, and here, this is another Hong Kong gap. So it came in, bounced, came down, went up again to fill that in. Where do you think price is going next? Could go there, or let's just set the previous days as well. So we have, again, same thing every single day. You just plot it out into the same thing. This is the 5-minute. Go here, 59 to 59, closing of the candle. See our price is, it's stunning. It's absolutely beautiful. We go to 9.15 over here. 9.15, opening price. 16. There we go. The closing and the opening was 16. And we have 4 o'clock, which is all the way down here. 4 o'clock closing candle, which is this one. Let's pull that out. And we go to 9.30, just right here. 9.30, opening. As you can see, immediately at 9.30, price registered from this gap. But how do you know where it's going to? That's just how do you know? Because it's seeking the Hong Kong gap, which goes to fill that in perfectly to price. It then actually seeks the equal highs over here, snaps it. You wouldn't have entered because there's no market structure shift over here. The only market structure shift that happens is this one right here. Bang. Then what do we have? We have a fair value gap. You take your entry. From there, you have your highs and you target the gap. That gets filled perfect. And price continues doing its thing. That's another 6R trade. Shocker. Then we do the same thing again, shall we? Last, we're going to do the whole week. 59, 259 over here, closing candle. See how price has created this beautiful liquidity. I love seeing that. I love it. Why does it do that? Well, 259. That's when the Asian Hong Kong market closes. We then have 4 o'clock closing candle right there. That's your 4 o'clock. Let's drag that out in time and price. That closing, perfectly respected. We have 15, 16, which is very, very close. Ooh, that's delicious. And of course, price from there creates a beautiful, beautiful, beautiful little candle. Now, I see this. Like, look at that perfection. That's just perfection. Every single pip on the dot. On the dot. No, without fail. So let's just drag this forward in time. We then have our 9.30 opening price. It's a very tight range there. But what we have is we have the previous day's open, this gap over here, and we also have our Hong Kong, which is this one over here. No, it's this one. Now, because of that unfilled liquidity on the buy side, as I said, you wait for the next day if it doesn't fill out that one. On the next day, you are expecting price to start seeking a certain form of liquidity. And so we have what happens at 9.30, price opens, comes in, fills the gap between 9.50 and 10.10. This A could have been a trade. So you have a fair value gap right over here. You could have taken that trade from there, had your highs over here, and just targeted either this or the bottom, but you're taking partials along the way, of course. Every 50% you take your partials. Or you could have traded the complete opposite direction. What happened? We had a market structure shift right there. We have a fair value gap that's right there. And you could have taken a long from the lows, because we know price is going to fill in the unfilled price for a nice decent 7R. I hope you're all getting what I'm saying over here. I hope this is so. My time is New York time, UTC. Yeah, you'll see at the bottom of the chart over here, UTC -4. It's New York time. These times are exact, like it's perfection. So do we understand what's going on now? If you're a US trader, it's very, very easy to see where the market's going. Very easy to see. We have unfilled price. Price comes down. It then creates some shenanigans. Okay, this day afterwards, the opening gap was here and the Hong Kong was here. So that's your target. We have the target it was seen to, and then it reversed because it's seeking to fill in the rest of the Hong Kong gap. To perfection. What a shock. Anyways, I don't trade NASDAQ. Like I said, I trade the US. I trade the US 500 if I'm trading New York. Okay. Now liquidity, like I said, these points. This is. Everyone looks at the market. They look at their candles. They look at all this nonsense, and they create all these other things. You can literally take any strategy you want. I don't care if it's moving averages. I don't care if it's a break of market structure. If it's a random just YOLO into the chart. Okay, from those certain times, right? We have this. We have a move over here. If I were to let me actually. I don't have any indicators. Where's the indicators? Here we go. I don't ever use them. Let's go MA. Moving average. Is there anything with like 2 moving averages or 3 moving averages? Say 2 moving averages. 2 MA. MA ratio 50, 100. This is locked though. I don't know. Why is it locked? Contact author. I don't know. Let me just put on. Like I said, any moving average. So let's just put on like an exponential. Okay, and we'll put on 2 of them. Now I'm gonna change the one to like I'm just creating a random thing here. This is gonna be length 21, and this one is gonna be, let's say, length 11. I don't know, 11. But if that's 11, I want to make this 22 for the lols. Okay, like I said, I don't care what strategy you use. If you're using ICT's one, which is this one, if you're using crossing moving times, whatever it is, right over here, okay, you can see that that's crossed over. It fills in the fair value gap, but then it comes down. So if you're using that as your strategy entry or whatever it is, you can make money. If you're looking for, I'm waiting for confirmation on whatever it is, your confirmation is that price, if price gaps, whatever, I don't know, I'm just making this up as I go. As you can see here, price is gapping, okay, as in the two are moving away from each other. Then guess what? There's your entry, okay, within there, on the highs of that or whatever. If you take it on the line itself, you have whichever mental state that you want to be in. If you're whatever you're comfortable with, you then take your trade and it goes to where it needs to go. Like if you're waiting for pullbacks, you know that price is going to fill this gap over here. You know it is. So if you're waiting again for it to gap, if you're taking another entry, whatever, within that gap on that line with your stop over here, like it doesn't matter. It doesn't matter what strategy you're using. You just need to know where liquidity is and how to find price, literally. And it's not that hard because in Asia, it tells you where it wants to go. Yesterday, okay, we have my entry over there. I know because price did not fill this Hong Kong gap over here. Here's our Hong Kong gap from there. Okay, to our 915, which is, where is our 915? 115 down here. Okay, that's our Hong Kong gap. I know that price is going to come fill this in. The highest probability time that I look for that is between 250 and 310 for a reversal. Again, let's pull this down to the 1 minute chart, and let's put these moving indicator averages thingies on that I never use, because I'm looking at price itself. I'm not looking at exponential to them. Okay. And again, let's make this whatever. I'm going to make this a random number, 50. And I'm going to make this next one, let's say 9. Okay. I know that price is going here. I know. You know, because that is your gap. What we're looking at is a specific time of the day between 250 over here and 310. Very, very common. What you'll get is you'll get price switching around to start aiming for the daily opening or the Hong Kong gap. I know that price is going to fill the Hong Kong gap. So now with our random thing, again, you can take it on the crossover. You can take it with as it comes and taps that line, whatever. You can take it from if it breaches that line, okay, like, or however you're going to trade. You know that price is going up here. It doesn't matter. It doesn't matter how you trade. And it's consistent. Literally, just go find it on your charts yourself. Let me remove this nonsense because, like I said, I take price. Yesterday, on my personal, I'll show you on GBP. At that time, specifically, I know, where is it? 3 o'clock. Yeah. I know that price is going to start making its way up to here because there's a big pool of liquidity there that gets set in Asia. I know it. So what am I looking for? Between 250 over here and 310, it creates a gap. It creates a fair value gap over here. Okay, price rages higher. It then breaks here. It breaks the structure, comes back within that fair value gap. I took my trade, all right, in that fair value gap. And then from there, my lows were set underneath this blue candle because that's where I feel mentally comfortable to take my stop loss. And then as soon as that happens, price goes up. My target generally is 4R with partials at 50. Every day, every single day. These points of liquidity throughout the chart, you can see how perfect price comes down and takes them out perfect. This one over here was created, go back in price, go back in price, go back in price, on Tuesday last week. Okay, that was created. No, was it last week? Yes, it was. You can see how price comes down, and then guess what? It comes and fills that in again. It goes up and then scrolls sideways. It comes in perfectly. Look at the pips. This over here. So it's not a perfect placement. So let me just, because it's not, if I don't see perfection, it means that I put it at the wrong place by a fraction. There. See, I know I'm off by a fraction. Okay, now let's go back to that same place in the chart. Right there. Now you can see how price respects that to perfection every single time. And then makes its way going down. Makes its way going down, 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 down. It comes back up to your Hong Kong gap, weekly opening, all that kind of stuff. Perfection in price. This little range over here, that tiny little gap over here that was created, okay, that tiny one there, that's perfection. Scroll that out in price. Why do you think that price created perfect liquidity here and from there moved down? Wow. Wow, wow, wow. Okay, like I said, literally just have these things on your charts and you can create whatever strategy you want, however you want to do it, whatever times you like trading in. Obviously, you're going to find the most probable times that you trade and how you trade. But what I do is that I have, let's see, I've only got 4 minutes left. So my whole idea, basically, is that this opening in Hong Kong, that's what I refer to as settlement price. Every session, my target is settlement price, whether it's Asia, whether it's London, whether it's New York. If it doesn't work out in London, it's going to do it in New York. If it doesn't work out in New York, it'll do it the next day. So over here, we can see that in Asia, right over here, this Hong Kong gap that was formed and the opening gap was not taken. So during London, between 250 and 310, my aim is to go short. So as soon as I see a break in price, a break in structure, which is down here, okay, I'm looking at the fair value gap. And I'm trying to target the lows, but it gives me 4R, fortunately. So I wait for the next session. We go into, which is the one I took, which is we go into New York between 950 and 1010. There's an indication that price wants to go lower. So I get the fair value gap, I put my stop, and I target down here. But fortunately, I got out of that trade as soon as it started coming up. I was like, I call it timed out. So I don't want to be in trades for hours. I don't want to hold trades for days. I just want to have like a couple of minutes, 20, 30 minutes. I'm in, I'm out, I'm done. Okay. So then we look at the next day. My bias, my whole initial bias is still short. But because price sets up over here, goes underneath that section, I'm expecting it to go higher. What happens is that's the new day. Price in Asia comes down. In London at that time, it comes and fills it. Then we have a short reversal from 6 and it continues going down to guess where? What a shock. Every single day. You might look at my chart and be like, wow, there's so many lines and crap. No, those lines are indication of where price is most likely to go. So again, we had this over here, which is our liquidity, which is our square box. I like square boxes and rectangles. Price went up there, and because it started doing little shenanigans over here, it touched the opening gap. Guess what? I'm out. Trade 4.39R. Done. So hopefully that has helped some of you who are doing the whole US 500. Let me remove this nonsense. Hi. Can't see price. If that like lines and stuff, it just distracts me. Okay. So there we are. Successful trade. 2R. 4R. 4R is actually over here. Daily open right there. And it's done. Okay. So it's super it's you know where price is gonna go. Okay. How you get in again is up to you. It depends on the time, when you trade, all that kind of stuff. I'm just giving you what I observe in the market and how I've come up with my strategy and why I do what I do and why I'm profitable. This is the way I do it. And as long as you have the patience to be like, well, it didn't present at the time that I wanted it to, you don't take the trade. Today was a perfect example of price did exactly what I wanted it to. It went away from the opening gap. The Hong Kong gap was set, and then it's going to eventually come back in. If we look at DXY, it's the same thing. It came in, filled in the opening gap, that equal low I said, remember? I said it's going to probably, if it's most likely to reverse, it's going to go from this equal because they set the equal lows and then push price. Then after that, they'll take some kind of something to eventually come back and fill in the rest of the price. But that's not within my time of trading. If that's how anyone wants to create whatever, like I said, you can create whatever strategy you want, whatever time you want. You just need to know where price is going. What I'm doing here is I've figured out where price is most likely to go. Some days it doesn't work. Some days it'll take a loss. That's okay. But most times, the probable chance is that the target is either the opening gap or the Hong Kong gap. Okay. So that's if once you see it in the charts, the way that I see it, your mind, you can literally transfer this onto any chart you want, whether it's anything that's crossed with US dollar. Okay, I don't know if it works in the other pairs, because this is something that I observed with within, because I cross correlated it from the Hong Kong 50, because they open their times at their closing candle is 2:59 and their opening candle is 9:16. And I literally just cross-correlated from there, because I was like, well, Asia's a big market, isn't it? Asia's a huge market. There's anything that goes into Asia, money-wise, has to go through Hong Kong. That's where it gets filtered through. And I was like, well, if money's going to and from Asia through Hong Kong, obviously that means that there's important liquidity that rests there. So that liquidity has to be settled every single day at certain times. All right. So hopefully that was a little educational experience for everyone. And now you see exactly how I trade, why I trade the way I do, and what I've said. Okay. Everyone can do the same thing. Everyone and anyone. You literally just put lines on your chart. You see, okay, well, there's a shift in structure, or however you trade. Like I said, I don't care if it's moving averages, if it's trend lines, if it's what, it doesn't faze me. I don't care how you trade as long as you make money. The aim of this is to make money. It's not a game. So here, I'll put it in the chart. So where I got the idea from, okay, is basically, if you look at the HK50, let's go on to that. Here's the HK50. Okay. Do you see a big gap in the chart anywhere? My eyes immediately go right here. Oh, nice. Okay, perfect. There's a huge gap in the chart. There's no price. Zero price. What time is that? 2:59. Okay. What time did they open? Here, it was 9:15 on Tuesday. That's not 9:16. It's 9:15. The open. What happens to price? Well, it goes down, and guess what? It has to fill in that price. What a shock. The next day, we have this gap over here. No, this is the other gap. This is my mid-morning gap. And the reason why I call it my mid-morning gap. My mid-morning gap forms at the close of 4:29 and the open of 5:15. This is my mid-morning gap, MMG. These are important. This sets where I'm expecting, especially the Wednesday one, where I'm expecting price to go in the next week. So as we can see, price came in, filled in the gap, okay, and then MMG, that you drag that out for next week. That's your target. That's your bias. We have over here 2:59, 9:15. 2:59 closing, the 9:15 opening. That is your gap. your Hong Kong. That's why I call it the Hong Kong gap, because it literally comes from Hong Kong. That price goes away. What happens between 9.50 and 10.10 is it comes towards price again. And now we're going. What a shock. We have previous day, mid-morning gap, which is here and here. Okay, opening 4.29 and 5.15. What happens? Perfection in price, isn't it? We then have our opening gap, which should be below that, down here somewhere. Here we go. Here's our opening gap. So the closing of 9.59 over here, that candle, and the opening of 9.16, which is over here. That is our gap. That I wonder where we're going, seeing as it was unfilled. It will blow your mind. Cross correlate this onto all the other charts. Okay, here's the next gap. We have the closing. Oh, they had a special gap over here. Sunday to Monday. It's a special one. That's a unique one. But guess what? It doesn't get filled properly. What happens? It comes and gets filled. It comes and gets filled. That gap gets created with that. As a public holiday, obviously. But we have the Hong Kong gap, which is right here. What happens in price? Goes away, comes back towards it, filling it. It hasn't filled it completely. So, bias on the long term is short. We carry on, let's carry on going. Okay, you'll see the craziness of this. We have closing of this candle, opening of this candle over here. What happens? Price goes away from it, fills in the rest of the gap. It then goes down, comes away from it, fills it in, and then slap. Bang. So you look forward in price. Where's price going? Oh. What? Was that almost to perfection? Wow. Okay, then we have this next gap. Wait, what is that gap there? You see that? That is 2.59 and the opening of 9.15. 9.16, sorry. Over here. Price goes away dramatically. What are we expecting now if price has gone away dramatically? That this is a very big point in price. It's a big draw on price because it has not been filled. So price goes down, starts creating shenanigans, and then guess what happens? We go and fill this price perfectly. Perfectly. Cross correlate that on whatever chart you trade. And then you see why I have these lines on my chart. Because it's how the market works. Literally. So this is not ICT. What is ICT? Because his concept of the opening range made me seek opening ranges on other things, and especially a big market like Asia and Forex and stuff that have to be traded through Hong Kong. So everything has to be settled through Hong Kong, and whatever price is happening within there needs to be filled on the other charts. So if you're lost or whatever, just rewatch this video again. We had a successful trade, and B, the explanation of my Hong Kong gap and why I have my Hong Kong gap. All right, so thank you so much for tuning in. I hope you have a lovely day, and I'll be back tomorrow between same time, 10:30 my time until 12. Do the same thing every single day. All right, trade safe. If you enjoyed this video, please give it a big thumbs up, and I'm sure Trading Nut will love it. And yeah, have a wonderful, wonderful day or sleep or wherever it is in your time zone. Enjoy your life. Don't stress. Remember, I actually made a tweet yesterday about how, like last night, about how I think it's very, very important that you look after yourself as well. That's a very key thing. When we're on the markets a lot, we're looking at these things, we're seeking discoveries in price, and we have like aha moments. We tend to get so zoned in that we forget to look after ourselves. You're also important, okay, as a person. Okay, so have a lovely, lovely day, and I'll see you tomorrow. Bye, everyone.